Today, I want to talk about how this article believes that a large broker or a short seller could be stealing from its customers to cover its losses, meet margin requirements, and therefore avoid margin calls. So stay tuned and let's make some money. Later in the video, I also want to touch on the massive 143% gainer we had on Vrax in the Millionaire Mindset Trading Group. But first, let's dive straight in with the key information. So, the article starts saying even if everything is back to normal and everyone is behaving as if the events from 2 weeks ago were just a bad nightmare, it's hard to put aside that strange feeling that something is off in the markets. So it says this is what we know for sure. Japan experienced a crash even worse than the 1987 record. On Monday, the 5th of August, retail brokers pulled the plug during US trading hours, claiming technical problems. On Tuesday the 6th, Japan's BOJ, MOF and FSA met to discuss the market situation. As a reminder, on top of that, the Fed actually met on Monday as well to discuss this massive issue. Brokers and market makers were on the hook for hundreds of billions of dollars in transactions to settle. And actually this smaller crash in 1987 actually wiped out many brokerages. So how is it possible that Japan suffered this massive stock market crash, but yet no collapses were seen? It says there's actually a lot of gossiping going on behind closed doors regarding a hedge fund that actually suffered significant losses 2 weeks ago, and a broker that was very exposed to it. It says this situation isn't actually that different from the Archegos event back in 2021, which ultimately led to the implosion of Credit Suisse. The journalist recalls the tale of MF Global that had massive losses and massive liquidity related issues, but transferred funds from its clients' or customers' accounts into its own proprietary accounts. MF Global concealed its losses by effectively stealing funds from its customers and actually did so with the SEC on its side. The SEC wanted someone to purchase MF Global and actually allowed them to take their customers' funds until ultimately they went bankrupt. The journalist also says the exact same thing could have happened with Credit Suisse, and that's why all of the documentation is under secrecy for another 49 years. And asks the question, saying what are the chances that another major broker is in a very similar situation right now? We can see here from this chart a couple of weeks ago, the Japanese stock market was down nearly 15% in one single day, a larger drawdown than was seen in 1987, which actually wiped out many brokerages. This was the day we saw stocks like Nvidia, Apple, Microsoft, Tesla, and many others down 10 to 15% in one day. And this article says that a separate hedge fund and broker are very exposed and are still exposed to these losses. Now, these losses arose as a result of this so-called Japanese yen carry trade. Deutsche Bank is estimating that whatever hedge fund is holding this trade could potentially be $20 trillion in the hole, or at least the size of the trade is towards 20 trillion. And that's why Kristen has said to be skeptical when big banks tell you that everything is fine, because they don't want investors to panic and pull their money. She said there's a line from a Bloomberg article she posted yesterday where JP Morgan and Citigroup seem to suggest the unwinding of the yen carry trade is almost all wrapped up. And that's exactly what the shorts and the banks said about AMC and GameStop. They said all of the short positions had been unwound and that all of the shorts had covered, which we know to be a lie. So it's likely the unwinding of this yen carry trade is far from over, and a hedge fund and a market maker are still deeply in the hole. I also want to touch on this massive trade on Vrax from the Millionaire Mindset Trading Group. You can see here in the pre-market, I told the group that Vrax was going crazy and to get in on the breakout level at $3.69. I then kept the group constantly updated, telling the group when I'd bought shares and when I was selling. Harhan locked in 2 gains of 75% and 22%, and Ducat also made double his daily goal in just one trade. The price of the Millionaire Mindset Trading Group will be going up next week, so be sure to get in now at the lower price using the link in the description below. Now, Vaughan is suggesting the only reason we haven't yet seen margin calls being issued is because the margin issuers are desperately trying to figure out a way to initiate the margin call process without tanking or destroying the entire market. Obviously, this hedge fund and this broker needs to be margin called and closed down into bankruptcy, especially if they're stealing money from clients and customers. And it's likely the only reason why this hasn't happened yet is because the Fed wants to ensure it doesn't accidentally destroy the entire financial system. But rest assured, just like with MF Global, who had the SEC on their side to steal money from their customers, they did eventually go bankrupt and receive a margin call. Again, MF Global actually happened back in 2011, and of course, many margin calls were issued to many hedge funds and banks back in 2008. Even Lehman Brothers was margin called. So therefore, the biggest of the big hedge funds and market makers will eventually be margin called as soon as the Fed can ensure the financial system doesn't collapse. Now, the Wolf of Ape Street has also tweeted saying that when AMC hits $100 million of EBITDA, you'll see how much fundamentals matter, saying those on the hooks and the thieves can only distort that which is distortable. No more distressed debt and profits equals no more naked short sellers. It's only a matter of time. And again, this is something that I do absolutely think is true to an extent. As soon as AMC generates more profits and more revenues, which is just around the corner, the price will move up, just like with Tesla and many other companies before then. We know at one point Tesla had the largest short position and the largest naked short position as well. Once trading at just $10 per share and below, now trades at over hundreds of dollars per share. There does come a tipping point when fundamentals do overweigh those short sellers, regardless of how big the naked short position is. And effectively, the bigger the naked short position is, the bigger the losses for them become. Now, the French AMC Ape has also explained how the Wall Street analysts actually work for these hedge funds, saying, fun fact, Wall Street analysts dropped a ton of fundamental analysis articles about GameStop right before it went from $10 to $80 per share and raised $4 billion in cash. Those articles said that GameStop's fair value was just $5 per share, even though days later it ran over $80. You'll remember from my previous video, analysts once gave AMC a price target of over $500 per share, but are now trying to convince you that it's only worth less than $5 per share. And that is because, as Shay has tweeted, the short thesis on AMC and everything these analysts are going off of is just that these hedge funds can't get out of their short positions safely. Right now, these shorts have the option to continue naked shorting or to close out of their naked short for a significant loss, destroying their hedge fund. But as I said, there will come a tipping point when fundamentals outweigh that synthetic short position, regardless of the size, just like with Tesla. And something I think is very interesting that revolves massively around this synthetic short position and the lawsuit against short sellers is the fact that Virtue is fighting the SEC. Again, in my previous video, I covered this lawsuit where Virtue is being sued by the SEC for trading in front of customers. Virtue is set to only receive a small $25 million SEC fine, but instead of accepting that fine, they're trying to fight the SEC in court. And as this article points out, it's a very unusual move from Virtue to, instead of accepting this small tiny fine, to try and fight the SEC. Likely because the information that's collected by the SEC can and will be used against them in their case against short sellers. As Anti replied, he said everything discovered in this SEC case against Doug Seafood and Virtue can and likely will be used in the ongoing Department of Justice RICO lawsuit. Usually these short sellers are just issued small $25 million fines, which is actually what the SEC even tried to do, but yet Virtue is trying to fight it. Clearly there's something much larger going on here. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.